Okay, hello everyone. We're going to have a quick look on the DXY and the Euro USD. It's going to be very fast. It is not a teaching, it is a quick view. And what I want you to do with this view is for you to have clarity on what you should be anticipating for the week and even for the remaining days of the month. In fact, for the next quarter, that's September, October, November and December, what are we likely anticipating from the dollar? Why we are looking at the dollar? Because the dollar is very important. Whatever is happening in the dollar, it has direct impact on the currencies, that is the Australian dollar, the Great Britain pound and any other dollar cross pairs you are watching. So I'm focusing on the dollar at the moment so that we build understanding on what is really happening with the dollar. For those who have been following the discussion that we've been making on the dollar, it has been actually direct. As I said earlier, this is gonna be very short, maybe 15-minute video, just 15 minutes in order to capture all this information. So literally, this is the dollar, and from the month of September 2022 we had a rally down on the dollar. This rally down, of course, we had some lows that were cleared. I believe I'm talking to people who already understood, who have already understand what we're looking at in the market. So we had some of these lows taken out, because ideally, if this market was going to continue giving us a bullish momentum, we were supposed to have this level holding the dollar and pushing it up right from this level here. Okay, I prefer to have a red color there. Okay, good. We're supposed to have this level holding the dollar, probably even taking it down like this, holding the dollar and pushing it up, and then we will be having something like this here. The dollar will come down here, and then we'll have something like a reversal indication, and then we take off from here, maybe even clearing all these other highs, something like that. But we had a reversal on the dollar, which showed onto us that the dollar is weak, and that weakness was why we broke this level here. We broke this one as well, and then we came right here where we formed relative equal lows. The moment you see relative equal lows, there is an indication for a manipulation that is about to happen. And so we had this manipulation happening, this accumulation of liquidity happening here, and then the market went back to internal range liquidity. That is this other block here, right? Internal range liquidity right here, and from that internal range liquidity we targeted the external range liquidity in the form of these relative equal lows. And breaking this level is like a manipulation movement, because when we got this relative equal lows taken out, we got an aggressive movement up. So I want to take this level here so that you can be able to see what I'm talking about right now. Ideally, in a bullish market, in a bearish market, actually, the down close candle that indicated, that initiated the breakage of this level, the up close candle, actually not the down close, this level here, this very up close candle, is supposed to serve as our key level where price will be rejecting during retracement. So when the market was retracing from here, right here, okay, so let me increase this and then let me bring this down a bit. Okay, good. When the market was retracing right here, we're supposed to have a rejection around this level. the rejection that will come and clear this low again, but that didn't happen, right? So what happened was we had a breakage of this level, and that gave us a market structure shift right here. The moment we get this market structure shift, we know that, just as I said earlier, this level here, market came back to a BPR, balanced price range, right here and right here. That's a fair value gap right there. This fair value gap, which is actually 50% of this down close candle, acted as a support, and then it pushed the market up. Of course, when the market is going up, we're already sure, of course, based on the indication that these are relative equal highs. You may want to argue that these are not relative equal highs, but I don't want you to look at the candle wick. I want you to look at the candle body. When you look at the candle body, you'll be able to agree with me that these are relative equal highs. The bodies are relatively equal in height, and so that's exactly what we mean by relative equal highs. So the market, from an external range liquidity, it's coming back to an internal range liquidity, where we will target this external range liquidity in form of relative equal highs, just like the same thing that happened here. We got to assess this internal range liquidity, cleared this level, and then we got that movement up. That's exactly what is happening here. So we are aiming at this level. So what happened was, market came back to that internal range liquidity, and then we rejected and came down to this level here, which we are looking at, and that is the level that the market just dropped down to. But I don't just want us to look at this level. I want us to look at something that is giving us more indication about this very price level. Okay, yes, we are having this very fair value gap right here. Is it possible for the market to come back to this fair value gap? In my own opinion, I don't want to see this fair value gap be respected, but if it is going to be respected, we can already see it. So let us be aware that it exists, right? Let us be aware that there is a fair value gap that exists, and that should not give us any form of fear, right? Because if this fair value gap is going to be filled as an inefficiency that will be balanced here, market is going to rally from this level coming down to balance this. But based on this movement, I want you to look at something which I think we are done with the weekly buyers. We're already sure that we are aiming for this. So the most important things that you should always be doing is to understand your draw on liquidity. Whenever you are able to get the draw on liquidity, then it will be easy for you to frame whatever thing you're thinking in your head. At least you have a draw on liquidity that you're aiming for, and you know that that draw on liquidity is not going to take 2 minutes to reach. And that's what I always say. It's not about just trading for 2 minutes. It's about understanding what the market is really going to do long term. When you have that clarity, then your decision, whatever it is, whether short term or long term, will always be guided. Because when I know that this is my draw on liquidity, and I see the market coming down here, I already anticipate another draw on liquidity right here. So this is another block right here, and the market just dropped down to that other block, and we can see how the market is closing there. That is looking at it under the 1 week perspective. I want us to zoom out. Is it zoom out or zoom in? I think zoom out, right? To the daily time frame. And when you come to the daily time frame, I want you to look at something very important that is happening with the movement of the dollar here. This is that same fair value gap we indicated earlier, right? That same fair value gap we indicated earlier. This is it. So if this market is likely going to drop lower, it should stop here. This market is likely going to drop lower, it should stop here. And if this market is likely going to drop lower, the movement of the market dropping lower, I am anticipating it to happen inside this zone. So from this zone, this is what we are saying. This is a lower high here, and I don't want you to look at the lower high. I want you to look at the lower low that was broken. This was the lower low that was broken right here. right? So right here we can look at this zone as a mitigation level, this very down close candle as a mitigation price that will likely take us down to this very price. If this mitigation fails to hold the price, then we'll be having a market structure shift here, and then we'll continue going up. That is it. But if this mitigation is able to hold the price, this mitigation is going to send the price lower. This is what I'm saying. Of course, we're anticipating this to come back to this mitigation block, and from the mitigation we're having this other block. If the market comes and break it like this and then comes down like this, we'll be anticipating to continue going bullish. But what we're looking at is the mitigation block holding the price, right? Holding the price here and then taking us probably down to the fair value gap, and then we now push up like that. Okay, that is one of the scenarios that is likely going to play out. One of the scenarios that is likely going to play out is this. That is one of them. And I also want us to look at what happened right here. The down close candle that initiated that movement is found right here. I and my team have been anticipating this level since from the month of June, and we anticipated the movement, we anticipated this run down here in the month of June, right? It was in the month of June, of course. Yeah, we anticipated this movement to bring us down here. It didn't. So the market went back to where? To this level. It fails to clear this external liquidity in form of relative equal highs. Just the same thing that we're looking at here, external liquidity. So right now it's a very key level that the market is reaching, that is going to give us the direction for the next 3-4 months. That is the last quarter of the year, and we are going to gather the momentum from around this level. So this is a very key level that the dollar is. The dollar is in a very key level that will determine the long-term bias of the technical movement of the dollar. So we have the fundamentals that are supporting the interest rate is still, it has not yet been cut. If the interest rate is being cut, that will support the strength of the dollar, and then the dollar is going to continue rallying up, and then we will start to clear all this external range liquidity. All these external range liquidities, we'll begin to clear them. We clear this, and then we look at the main one here, and then we'll begin to anticipate whatever is likely going to happen by the left side of the curve. But right now our eyes are focused right here. We want to see what is likely going to happen in this very level, and that will give us a clarity on what is likely going to happen with the dollar. So this week is a very crucial week for us. So now I want us to look at the price action of last week in the 1 hour time frame, and that will give us another information on how we are likely gonna have this week printing. So this is the price action for last week. Last week we had this market coming down. This was last week movement. So we are aiming at this internal range liquidity, so we can clear this external liquidity. That is, if this fair value gap in the weekly time frame will be filled. Remember that fair value gap, if it will be filled, then we'll be anticipating the market to come down here. But we want to see the market reaction in this level, right, which is the internal range liquidity. So we'll see the reaction of the market in that level. Okay, so that will give us clarity. So right now we're looking at this level, inside this level, and inside this level our drawn liquidity is this internal range liquidity. We have not yet arrived at the drawn liquidity, so we are still looking at, let me take this out so you can be able to see, right? So right now we're still looking at this market movement to continue this bullish movement for the first probably Monday, Tuesday as the weekly profile, or the market weekly profile is likely gonna say. That is Monday, Tuesday, Wednesday, we're likely gonna have the high of the week, and then Thursday, Friday, we're gonna drop down. So that's what we're looking for. Our drawn liquidity right now is this internal range level. That's our drawn liquidity, right? In this level, when we come inside this level, we'll see the price action, and that will give us clarity on what we should do. But at the meantime, we're looking at this market pushing up to that draw on liquidity. So how is that market movement interpreted? So right now we're having this level like this, right? That was a market structure shift happening right here. The down close candle that initiated this movement will be respected, and that was it happening right here. So we went and we cleared this external range liquidity. So we are aiming at the internal range liquidity, all the internal range liquidity which are going to serve as the high resistance liquidity levels. Those will be supported until the market has reached our draw on liquidity. The same thing happening right here, right? So the down close candle initiated that movement, is still looking at it right here. So this, we're anticipating the weekly profiling of the market. That's Monday, Tuesday, Wednesday to give us high of the week. This was last week price action. So this week is starting a new price action, and we're anticipating it to come into that draw liquidity, and then we see the price action if we're gonna have market structure shift, or we're gonna have a reversal inside the internal range liquidity, which will now aim for the external range liquidity. So we're going to interpret all these things. This is not to tell you, okay, today you should buy, tomorrow you should sell. No, you have to learn how to do this. You have to learn how to see this, and you have to learn, okay, if you are able to capture this movement, you are done for the day. You are done even for the week. Right? So it's not every trade that you must take, and it's not every trade that is your trade. So you have to look at, which trade is my trade this week? Is it what is playing on Monday? You may have a movement from here that will come up here, and that will not be your trade, right? So when your trade is printed and able to see, you'll know which trade to take, and then your action will be guided based on that. So that's basically our look on the DXY. We are having, like, we're just looking for a reversal, long-term reversal, based on multiple factors that will give us the indication for the dollar. We're coming back to the euro USD, and we will start with the weekly levels. And in the weekly price action, I want us to pay attention to key informations, just the key informations, so we can be able to understand what is happening with the dollar with the euro dollar exactly. This is simple to see. Bullish market, we got a market structure shift right here. This is a very priceless information I'm giving here. We had a market structure shift, up close candle that initiated that movement will be respected, right? We're looking at that at 50% of that level right here. We got a reversal. So I want you to pay attention to the reversal that was happening. We're aiming at this external range liquidity. From internal range liquidity, we're aiming at this external range liquidity right here. Okay, easy to see. Yes. So let's look at the daily. I'm done. That's it. We're aiming at that external range liquidity. So this was the movement that brought us back into the internal range liquidity. This was our internal range liquidity right here in form of a fair value gap. And so right here, market arrived at level, and then we had a reversal right here. Right, that was a confirmation of a reversal movement. So when we got that confirmation of a reversal, we are looking at two things. When you get this reversal indication, the first thing you are looking at is the market will gonna retrace back to this level, I want to look at it at the weekly in the weekly bias. So we have already confirmed the reversal of the euro USD, right? Good. Now if you look at it with the weekly bias, you realize that the fair value gap is, the internal range liquidity is further reduced in this form. It's not as wide as you may want to see it under the daily time frame. So the weekly time frame gives us the internal range liquidity in this form, so we are not likely going to come up here, and I think the candle formation is supporting that notion that we are likely going to continue dropping down from that level, right? If there's any higher high, we're likely going to get is that up there. But with this movement like this, if you know how to trace the daily bias, you realize that we are anticipating a down week, anticipating the market to go down. And where will be our drawn liquidity? First, we'll be aiming for here. Maybe let's say we'll be aiming for here. We'll be aiming for here. So these are key levels for us that we are looking for, and I hope with this little explanation you're able to pick some basic informations and then you make the most of them. For those who are interested in joining us, we are starting a mentorship. We're starting a very interesting community, for the third batch of this year, and it will be great having you on board. You join our Telegram channel at Achievers InnerCircle, and it will be great having you. It will be great having you on board. Thank you very much, and stay safe.